Hey guys, Dennis Wilburn, the Active Trend Trader. It was an absolutely bloody week in the stock market, as you're probably aware. I started this week with 8 open positions, and I'm winding it up with 1. Our trailing stops and stop losses protected our capital and protected our profits, so that's a good thing. You want to watch this video all the way to the end, because now that we're back down into bear market territory, I'm going to provide you 6 tips on how to weather a bear market and at the same time come out a better trader at the end of that. One of the things I'm suggesting to folks is to do this right now. Do not buy this market. At least I'm not, until I get a price action, give me a reversal signal and momentum shifting back up to the upside. But before we go into today's session, hey, there'll be a drop down over in that corner. Follow it and you will get some information about the AutoPilot Trading service. It's doing very well. We're up over the S&P about 25% for the year so far. So with no further ado, let's go ahead and jump into today's session. Here we go. Okay, good afternoon, everybody. This is Dennis Wilburn, the Active Trend Trader. I want to welcome you to today's session of Trade Your Way to Wealth and Financial Freedom. Joining us from here on Oahu is Steve Farrar. Welcome, Steve.
To be here.
And I'm looking for Anil is going to be trying to join us, folks, but he is en route, literally back from Houston back to Delaware. He said he's going to try to join us from the aircraft itself. So we'll see what kind of Wi-Fi he has on board, whatever airline he is in fact flying. Mark made a comment a little bit earlier, are we in a bear market? And the answer to that is, for two of the indexes, the answer to that, based purely on percentages, the answer is yes. The Dow and the S&P are holding up fairly well. So let's go ahead and jump into today's session. We're going to be jumping almost immediately into looking at some charts. Remember that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's where we're sitting. This week was really a strange week. Last week we were up about 16%. We're closing off this week. We're up about 15%. We lost a little bit, but by and large, we're staying profitable, much more profitable than the other indexes. When I took this snapshot a little bit earlier today, as you can see right here, the NASDAQ down 19.45% from the high. The Russell down 20% from the high. And then the other, the S&P made a plunge to try to catch up. So we'll see how that works out. Going forward. So with that, let's go ahead and jump over and take a look at some charts. What we're going to do, I'm going to basically, let's take a look first at the indexes. And what we're having is basically kind of a classic meltdown. As you see, we made a rally attempt here, fell down, hit a higher low, and then on, I think this was Tuesday of this week, we actually had a bullish reversal signal in that we had a morning star right here when that big green candle, anticipating we're going to break up and continue pushing on up. Guess what? Prices hit the 200-day moving average and failed almost immediately. Puts in a bearish engulfing, huge bearish engulfing yesterday, then has continued to sell off again today. Where am I looking at this particularly going? The path of least resistance from my perspective is to push on down all the way back down to these past levels of support. As you can see, momentum has shifted down now on the TSI and the market forecast. What about the weekly chart? The weekly chart is it is below all of the moving averages now. And the TSI rolled over and crossed where? Right at the zero line. Those of you who were in this training session on Wednesday night, we talked a little bit about that in that when that middle line, that zero line on the TSI works as a level of a predictive level for support and or resistance. And we are getting a resolution this time down to the downside. We get in, and as you see, we've got a strong level of support right there at the 410 level. We'll see if we get down any further than that. Let's go over here to the Qs. Back. Qs, same thing, only weaker, pushing down. Again, targeting a price action stop right here about the 317 level. What am I looking for? I'm looking for a push on down to these levels down here. Now, does it have to get all the way down there? No, it doesn't. However, I would like to see the momentum indicator get below the negative 42 line right there, which would show that we are oversold. And then number two, we do have a TSI, a market forecast, two-line cluster. And all that is indicative. Price action has got to provide us a reversal signal. We had a rally attempt. So what we're looking at is we've got basically failed rally attempts, and then also pay attention to the cycles. We'll get into that here shortly. Let me go back real quick to here, we can just take this right now. From where we're at, from the past high over here to where we're at right now, we are down 20% on the Qs. And if I put in the NASDAQ, DX, and take the same measurement from past the high right there down to where we are right now. As you can see, it's at 19.98% to the downside. Russell. Okay, Russell is resolving down to the downside. It does have a strong level of support down here. And this market right here now, folks, is just telling us, don't do a darn thing. Literally, don't do a darn thing until, one, we have a reversal candlestick at a level of strong support. And so where's my level of strong support? Right down there in that little gray box. And the lower section of that is about 188. And so we're looking for a reversal signal, and then the momentum to shift back around. And that until then, I'm keeping my powder dry, Steve, and not doing a darn thing until I get a price reversal along with a clear shift in momentum. What do you think?
So I agree with you. I'm in the same situation. I do have a few open trades, but only because they've not triggered exits per the system I use.
Right on.
I've got just only 2 trades that are open.
Yeah, I started the week with about 8, and now I'm down to 1. And I have 1 position open. So let's talk. Let's see. Does anybody see Anil? Anil, have you made it on? I do not see you. So I'm going to go ahead and I'm going to show. Here is Anil's stock pick for the week. Stop ringing. There we go. Excuse me. Target right now looks very good, but it needs a pullback. And we are up above the 200-day moving average. That's good. That is a line of demarcation. If it fails at 200 or fails down here at the 228, it's probably going deeper into a deeper correction of about 228. Neil did not tell me whether or not he was buying it right here, right now. So, Steve, would you buy this right here, right now, or what would you wait for on target?
I would wait for more of a pullback and then price action to indicate a reversal and then potentially an entry, but only if the market has firmed, and at least firmed and not going down anymore.
Right on, right on. And so, and as that is a very important, I've got momentum shifting. What about the longer term momentum? Let's run over here and just really quick and take a sneak peek at the, okay, it has earnings coming up when? It has earnings coming up on
June.
Wherever that is. Oh, darn it. There we go. About the 17th of May. As you can see, that long wick on a weekly chart is telling you sellers came into control at 254. So that's what we've got going on. Look for some kind of a formation all the way back down. Again, that 227, 228 level looks pretty good. Now, Steve has, and Steve, I'm just going to run these through really quick. Let's go ahead and cover both the ones you're looking at. DAR, because I'm watching DAR also. Tell us about DAR, what you want to do.
I like the fact that it's double topped and pulling back. I think it's simply a pullback in an uptrend.
Okay.
I'm looking for price action to suggest to me that it's reversing.
Okay.
And or the market has to at least firm, if not gotten stronger.
Yeah.
But not going down. If the market is going down, I would not take the setup.
Okay, so with the current market conditions, which I think that we will probably shift into the market being in correction. Let's see what IBD has the still calls the market under pressure. I think that we will probably end the day, and the market will be actually in correction with these recent falls. And so, so DAR is one of them. And so, with the current market conditions, you're not even going to forecast where it may bounce. You're going to actually wait for the reversal in the price action.
Yes. And I don't use the IBD system so much. I have my own way of deciding the market is still in trend or correcting.
Okay.
But provided it has firmed and is no longer going down,
okay,
then I would take setups. But
okay,
if
what
it
about
continues to be going down, I would not take the setup that occurs.
Okay, what about this one?
Very similar. It's almost this identical kind of a chart, except it's into new high ground and now it's pulling back. So I like this a little bit better, but they're both comparable type stocks. Yeah.
Yeah. Now, one of the things that I like to mention to folks is pay attention to the cycles. Now, the cycles is when the momentum shifts and then runs down, and when does it tend to turn back around? The last time we had a shift in momentum, a strong one, was right here. And so what you can do is just calculate it. It's from there to where it reverses. And so how many days was that? That was 9 calendar days or 7 trading days. And so since this is in fact reversing here, you can project out where's 7 days from now. And it's about right there. And the what happens is typically those cycles, they repeat. So oftentimes you can put in an alert on yourself that will trigger, or you can put it on your phone, to say, hey, send me a wake-up call 5, 6, or 7 days from now. I want to go and check on this stock. And it'll keep you from over-anticipating and being impulsive with your trades. I like it. Here's my 2 picks, Steve. They're earning trades. I would not normally trade these. VMware is one of them. And however, what's going on is we are approaching a longer term level of support. Yes, it is. If I go back over here, it's in a horizontal. It's been driving sideways for going back all the way to 2020. This one has been, and it's down towards the low, make it a little bit lower. But again, I'll be waiting for a reversal candlestick. We had one on Tuesday, just like everything else, with a move back up. Again, this is an earnings trade, and it has earnings coming up on about, now here we go over here, earnings coming up on about the 26th of May. So that's one of them. The only reason I would trade VMW is because it is earnings, and you can anticipate some kind of a move. And what I'm looking for something very specific, 5 to 10% from the time I pick it up going into earnings. As soon as I pick up my 5, well, primarily if it goes up 10%, I'm out. Primarily. So that's one of them, VMW. And then the other one is, I like Zim. Now, Zim Integrated. This is an Israeli shipping company, and it has been quite strong, as you see, as it pulled up back here and started back up. It is at slightly below the 200-day moving average, at past support. Again, it's one of those that needs a reversal signal. I thought I had a reversal signal on, again, on this gap up, expecting a gap and go back up into the moving averages, and it turned out to be a gap and crap and dropped down below that. So again, pre-earning trades, earnings coming up when? Earnings are coming up here about the 11th. And so it puts me in the window for earnings somewhere between anywhere from 2 to 6 weeks before earnings, when stocks tend to get an earnings run. So that's what I've got, Steve. That's it.
I like it. I don't like VMware so much, but just because it's in the tech area and the tech has just not gotten going yet.
Right.
I do like the charts, and I think it's worth a trade at that level where we're at like quadruple bottoms.
Yeah, and I would, like I said, I would be looking at a couple of things, and I'll just throw this over here really quick. Is the other thing I go and roll over to is, what are the intraday charts telling me? Because sometimes a 30-minute or an hour chart will reveal a bullish reversal a little bit earlier than the daily.
And I do the same thing.
Yeah, and so right now it's showing way oversold on the momentums, and I'm getting. But however, the candlestick, the 8 o'clock candle, is not finished yet. It's got 15 more minutes to go. So again, and it's really kind of tiny right now, but it is worth a peek, and so that's what I'm looking at. So what else do we have going on today? Let's talk about a couple of things. What do you do during a bear market? And one is stay in cash. And that's one thing I like about the AutoPilot Trading service and also the active trend trading system. It moves a person to cash to keep them out of the way of even more dramatic downside. It moved us to cash back in February. It's in the process of moving us back into cash right now. Stay engaged. A lot of times when we get into, a bear market can last for sometimes up to 1.5 to 2.5 years. I see very little on the horizon that is telling me that, this is going to be a short and sweet type of bear market, that we may be in for some really tough sledding going forward. Are there going to be great trades during that time frame? You betcha. But at the same time, stay engaged, be disciplined, consistent, and with a consistent approach. Study past bear market reversals. I have some training videos over on the YouTube channel, Market Tech Talk, that show what bear market bottoms look like. Be ready with a watch list of stocks, just like Steve and I and Anil have shown, that of stocks that have held up or are holding up better than the markets. Remember, not all follow-throughs lead to the bull. As we saw this week, we had a rally attempt that failed. Wade back in after reversal days with a follow-through according to your rules. And as we like to do, is we reduced our exposure by limiting the number of shares that we buy. We never buy back in at 100% while the market is, one, under correction, under pressure. And so you can ask yourself also, what do you need to learn during a bear market, and use this time to, one, become a more consistent, more profitable trader moving forward. So anything you want to add to that, Steve?
No, I think you summed up very well. There's times to be in the market, there's times to be out.
Yeah.
Yeah.
And this time, at this particular time, it's kind of one of those times to be out or very extremely cautious. And I don't know if everybody caught this, but when Steve said he's in like one or two positions waiting for his system to take him out, he's not just, throwing the baby out with the bathwater, but he basically is letting his system work for him, which is exactly what you want to be doing. So, okay, guys, that basically, you want to be a more consistent trader? Well, here's something to do. Learn to wait. Learn to wait. Patience is a virtue. So, hey, do you struggle with this? Uncertainty and fear about what stocks or ETFs to trade? Well, at AutoPilot Trading, we solve that issue. If you want more information, you can go, and the link will be on the website or in the description on the YouTube video. So that's it for today, guys. We're just standing by, waiting for the market to settle out, waiting for the dust to settle. And so 2022, patience, persistence, and consistency. And Neil, we missed you today. But at the same time, I think that Steve and I did a great job of covering the stock that is on your list for this week. So aloha, trade well, and prosper. Mahalo. God bless everybody. And Steve, thank you.
My pleasure to be here.
We'll see you next week. Aloha, everybody.
Hey. Bye.